The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the December 21st, magical Monday edition of today's Trader's Edge show. I'm Rhodes TV Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure that you and I have an extraordinary one. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go look at the circumstance of the bulls and the bears, the buyers and the sellers. We'll go figure out what it is they're communicating to you and I. I'm honored by your presence. I'm grateful for it. But most importantly, I'm here to serve you. So feel free, pick up that phone, dial on in, 877-927-6648. Of course, internationally, you can reach out to us at 727-445-1044. So let's get the show started here on this magical and magnificent Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading up about 50 points. She's trading at 17,177. S&P is up 8 points at 2,013. NASDAQ Composite up 30 at 49.53. The Russell 2000 is up 3 points. Gold is up 14 bucks. Silver is up 19 cents. Light sweet crude back 29 pennies. Natural gas is on the move here this afternoon, today. We haven't seen that for a while. Leading the charge here to the upside, dollar-wise, you've got Agios Pharmaceuticals up about $7. That's nearly 12%. Baidu is up $6, about 3%. World Acceptance Corp up about 14%, $5. Google's up $5. To the downside price line, leading the charge dollar-wise, that's $13, only a little over 1%. Pioneer Natural Resources, that's down $6, about 5%. AutoZone is off $5. Chipotle is down $4. Let's go ahead and get things started off on this shortened trading week, right? So we've got the market is closed early on Thursday. I should know what time. I don't know if it closes at 1. I'll try to figure that out during the break. I was just looking at a screen. Maybe somebody in the den will post that for me. But we do have a half trading session on Thursday out here. So it's going to be a very light trading week. I would pose the question to you, what's the probability of this week closing above Friday's close? Do you know what that probability is? We'll go ahead. We'll get back to that in a little bit out there. But maybe, you might win a prize if you post the correct percentage out there. And then I'd ask you the question, what's the chances that next week are an up week? So we're going to have 2 short trading weeks out here, in celebration of the holidays. And the question that you should be aware of is, what are the odds, if you are an odds player, that the week closes higher or lower? And we will come back to that. But let's begin by taking a look at what the markets are doing. Now, I am not seeing any bottoming signal type patterns that are in the marketplace, with one slight exception, and that slight exception really being the 2-hour chart here inside the Dow, as it was pushing just slightly lower here at about 12 noon. This is a 2-hour chart that we're looking at. Very similar to the close at 1 o'clock. Perfect. So the market's closed at 1 o'clock on Thursday. Thank you. So as the Dow futures contract, that's what we're looking at on my chart, my screen right now. As it was pushing lower into that 12 noon time frame, it was pushing lower with less relative weakness. Same type of pattern that had formed out here at 12 noon, believe it or not. I don't know how that works, at 12 noon on December 14th. Now, is the same pattern going to unfold here? I don't know. It might. It's made a 100% move by getting back to that low. So when I say there aren't any real bottoming patterns, I always like to see the market move lower or higher with less relative strength or weakness. Then I like to see the bulls or the bears rush in, give us some kind of other signal. It's like sending up the flares out there. And as long as we pay attention to the flares, we're in pretty good shape. We don't have element number 2, which is the cavalry running in here just yet. We can see on the Dow futures contract, prices trying to get back above resistance of its TAS market profile low, the bottom, the old support line. And once you break through old support, it can become resistance. That price, by the way, is 17,081. So we don't have any real significant confirmation yet, at least on that chart. If I take a look at I don't have the Dow 10-minute chart, but what I can show you that I do have over here is the NASDAQ 10-minute chart. And as we take a look at it on a 10-minute, because 10-minute charts here, these patterns really work the same way. And at about 4 o'clock this morning, about 5:40, 4 o'clock was right back here, 4:30 this morning, we saw the futures move higher. Now, that's kind of normal as Europe is coming online. And so our markets, the futures markets, went ahead and moved higher. We didn't really get much in the way of any kind of really reversal type signals at 4:30. Well, we got a bearish sash candle, but that alone is not really a bearish signal. We did see prices move lower. Now, the reason that we saw prices move lower, quite frankly, was we did get a signal here, and I'll just flip over into the 10-minute time frame. We did see price inside the ES mini. We did see price in the ES mini actually move higher, do with less relative strength out here, and that took place at 9:40 as the market opened, right? So you saw the market open. We saw the ES mini, the futures, go ahead and spike to a higher high that got to a nice 7th wave. It did it with less relative strength out there, and hence prices went ahead and moved lower. Now, on this 10-minute chart out here, again, I don't have any kind of on the ES mini, I don't have any real reversal signals on the 10-minute time frame. We can see prices move back into its 10-minute TAS market profile out there, 2005, 2006, in essence, being the point of control. So it's in an area where price is comfortable. If price can move above that, 2010 would be the number. 2011.25 is the actual number. If price closes above that inside the ES mini, then you do not want to be on the short side of the trade out there for a couple of different reasons. And if that area acts as resistance, then you've got a neutral to bearish type of a signal out here. Back to the 10-minute time frame chart here for the NQ. When it was making its high as the ES mini was, we didn't have the same type of patterns. That's why you've got to have multiple charts for the same instrument if you're trying to identify these shorter term tops and bottoms in the marketplace. And so with regard to the NASDAQ, preferably, it's right now up against resistance on its 10-minute chart. So we can see the NASDAQ is stronger than the ES if we're going to go ahead and use as our measurement tool the TAS market profiles. You can see that's the little dashed line going across my screen right around the 45.40 level. So it's up against resistance. So during this show here for the next 45 minutes, if we see the NQ power through that area, that's going to go ahead and lift the ES mini up to that resistance zone that I spoke about, right around the 2010, 2011.25 level. Now, inside the NQ, because it hasn't really given us that bottoming signal that I would prefer to see out here. If we just, and sometimes the markets just simply don't do that, but you still look for them. If we look at the 120-minute time frame, I'll go ahead and put this chart up here. What we can see is, so it was about the 45.40 level inside the NQ on the 10-minute time frame, and here we can see the market profile. The point of control, the center of the box out here is 45.53. So you get above 45.40, pretty good chance that what price is going to do inside the NQ is gravitate its way. Is gravitate even a way? A word? I don't think so. But it should move its way up into the 45.53 level. And if price gets above that, you can anticipate that price will move up to 45.42. We haven't seen the market bust out the lows in any sense at all. So there really should be no reason. Here, let me restate that. There should be zero reason for us to believe that the markets are going to go ahead and try to bust out those lows. It's just not there. If we take a look at these 120-minute time frame charts here, we take a look at these market profiles, we can see that we're back up above the support levels, and that's across the board. That includes the Russell 2000 as well. Now, does that mean that the markets are going to zoom to the upside? Only if they take out resistance. If we take a look at those 2-hour charts inside the NQ, if I did give that number 45.79 inside the ES mini. That price point is 2022. If it clears 2011.25, it'll go tag that 2022 level 2022. Russell 2000, she will make her way up into the 1124 area, and the Dow. If the Dow can clear 17,153 on its way to 17,298. But I'm not seeing any signals out here that suggest that the market's going to go ahead and try to bust out these lows and move to lower prices or anything along those lines. We just take a look at the trading that has occurred today. And to answer the question with regard to the probability of this week being an up week over the close of last Friday, the odds are 67% odds that that's going to happen out here. So it's nearly a 70%. It's not a 70%, but it's nearly a 70%. So do you want to, if you're short and you made some good money last week, we made money on the long side in the newsletter, and should have taken that short trade, didn't, but I won't make that mistake again. At least I won't make it this year. And you just got the odds are favoring that this market is going to find a way to move higher. Now, how much higher? It's not like a spectacular fireworks show, but when we take a look at all these different bottoming signals and so forth, we really can't. All we can really do is take a step-by-step, look at these different resistance levels, just like we do here, just like we are now, so that you can gauge where the market is headed to. So you've got a 67% chance that the market's going to move higher. Haven't seen any reason whatsoever here for the market to suggest that it wants to try to go blow out those bottoms. We've got your friend in mind, the euro, Japanese yen moving higher. Everything is really, the ducks are in a row for the markets to do what they're supposed to do. Now, one question, because I've gotten some emails here over the course of the last month or so. When I talk about this rally here, when I talk about this guy, the Santa Claus rally, just to make sure it's kept in perspective, because my definition of the Santa Claus rally is totally different than I believe what people think or what people talk about. Not that they're wrong, it's different. My definition of the Santa Claus rally is this. Odds favor that the market forms a bottom. You know this, right? We've been through this. But you know, if I said to you, when does the market, the stock market, make its bottom after the so-called sell in May high? You would answer, Steve-O says, no, it wouldn't be Steve-O says. It wouldn't even be Santa that says this. It would be what the markets have done for the last 84 years. They make their bottoms in the end of September into early October. They make it in the fall. This year, our Santa Claus rally began on September 29th. So when I like to put on the rally cap out here, it's just really more to have fun. But you have to understand that that rally, if you were the person that's looking for the Santa Claus rally and your focus has been on December as an example, you're missing the boat. Don't do that. Don't do that. It doesn't work to your advantage. Next week, what do you think the odds are that the markets move even higher? 75%. Steve Rhodes with TFNN. We'll be right back, folks. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
TigerTV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. TigerTV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 56, S&P is up 8. And question came in if we could take a look at gold. Many of you know that we were taking a look at this pattern here inside, I believe it was this pattern here inside of the 120-minute time frame chart for the February contract for gold. The blue horizontal lines on my chart out here, this is the consolidation area. This is a pretty large consolidation range that gold is trading within. Now, the cool thing about a consolidation zone is that typically, when I say typically, we're talking high percentage. We're not talking 51. We're talking like 80, 90% type probability out there. And when you trade within a consolidation, the market breaks one side or the other, you have what's called a measured move. That means that price should move equal to or greater than that consolidation level. Inside of gold, we're looking at somewhere around the, we'll call it 1045 to 1087. We'll call it 1090. That makes it 45 points. So whichever way gold breaks, the upside or the downside, should be about a 45-point move. Now, what we were looking for, what I was looking for, what I was anticipating, and this was right around, I'm going to guess this was on Thursday and Friday, when we were taking a look at it. From this little high out here that took place at the top of this consolidation back on the, really, it's from two different highs, but this was around noontime on December the, December 4th, December 5th, it's one of those days, December the 4th out here. If we take a look at moves to the downside, this thing at the bottom of the consolidation had gotten to wave number 6. Unlike all the way back here, back at about 10 o'clock at night on December 2nd, we saw the price move down into about the 7th wave out there, which you and I love that 7th wave. You know, if there's a wave that we're going to do in our stands out there, it's that 7th wave. So price, I was saying, hey, you know, it would be a nice setup if we could get to that 7th wave. It never did give us that nice little hammer candle out here, and that was at about 2 o'clock in the afternoon when that thing formed. We can see now inside of gold that we're now in wave number 6, most likely to the upside. What does that say to me? That says to me we're really still in our trading range. I would anticipate that the price of Goldilocks, is going to get up into that 1045 level. I don't know what it's going to do when it gets up there. It's likely going to be at a 7th wave move when it gets to that upside. If it's moving higher when it gets up there, does with less relative weakness, similar to this bottom that took place back here on, what was that, December 4th. Was it December 4th? Yeah, December 3rd out here. And then that says, guess what? We're going to stay in the consolidation inside of gold. That says you can go all the way back to the bottom. On the other hand, this would be to the bullish side. If gold can break out of this consolidation, you and I just covered it, we're looking at about a 45-point move. I don't know whether it's going to do that or not. I just know the areas that you and I need to watch for. And on this 2-hour chart, it is really important for us to look there. Let's go look at a shorter-term chart to see what we can see out here, see what's going on the 30-minute chart, see what kind of pattern we might have. Let me update this out here. Click of a button. And on the 30-minute chart, price has been moving higher with less relative strength out there. And, you know, I can probably make the case of it. So as I take a look at this, as I even take a look at its recycling of its wave count to the upside, what we know is on that 30-minute chart, it's moving higher with less relative weakness. Now, in this case here, that alone is not a bearish reversal signal, by the way. That just tells you, you know, that it's tired. It was working out real hard. It's been doing all the heavy lifting. There are no sellers that have shown up. Of course, if you were going to be a seller, would you show up now or would you wait into the top of that consolidation box? Exactly. You would wait up into the top of that consolidation box out there. So it's really important for us to watch what gold does as it gets up to those levels. We can take a look at this 30-minute chart and say, boy, it is losing energy. Is it going to take, in fact, if you're bullish gold, which I've got a bullish bet on gold at this stage of the game, I would really like to see it just rest right now. 1:30 in the afternoon, take the afternoon off. Take it off. You know, energize yourself and then really take on that resistance zone. Again, I'll put that chart back up on the screen before you try to bust out those highs out here. And that's, again, in about the 1087, 1090-ish type area out there. But it's probably not going to listen to me. So in summary, until gold breaks out of that consolidation, we've got actually all the patterns that are setting up that say, it probably is not going to do it this time. And that says that you could see gold run all the way back down to the bottom. Now, that's what the actual metal says. What if we go take a look at the miners? Let's go see what in the heck the miners are doing out here. And let's take a look at the overall group. Let's take a look at the GDX. Let's go see what it is doing. It's trading right now at 1388. Here's what we know about the GDX. It's trading right into, well, I'll tell you what, let's go do this breakout here. I hear music in my ears, and then come back to look at the GDX. Steve Rhodes with TFNN.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full custom optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 67 right now. S&P's up 10. Composite up 33. We were taking a look at, we were going to take a look at the GDX as we were going into the last break. So we looked at gold. Gold's given us that consolidation type move. We've looked at a couple different time frames. So that assists us. At least we can anticipate what is likely going to happen as gold gets up to that next level out there. In the case of and we're looking now inside the mining ETF to see if we can see anything. Now, here's first that one of the problems is going to be volume today is 20 million shares. We're in a lightened trading week. I can go look at the SPYs, the Qs, the IWM. I can go look at everywhere, and we're going to have light volume today, tomorrow, Wednesday, certainly Thursday out here. And am I going to really go ahead and take a look at today's volume and benchmark it against a volume such as Friday's? No, I'm not going to do that for sure. Or even last Thursday or last Wednesday, when at least most of the people are starting to take vacations now, and for the next couple of weeks out here. So volume cannot be like a weighted metrics when we are trying to take a comparison as to what's going on out here. Just in my opinion, we we can't. If we take a look at the GDX, though, and we take a look at today's volume, we've got 20 million shares, and it's trying to get up into the swing point from December 4th that has 76 million shares. Hey, we don't need to do the math on that. We can double it and say, there's no way. Let's take a look at some other tools out here. Let's just go ahead and take a look at our TAS market profiles, and resistance for the daily level is 1388. We're trading at 1386 right now. I would say 1388 becomes a key number. If the GDX can go ahead and overtake that level as a whole, then price ought to go ahead and try for that swing point from back on December 4th, volume or not. And if it can really clear the top of that, it's going to have to do it in concert with gold. Gold is going to have to break out in order for any of this to take place. Then it's got its next resistance level at about 1527. But I would be watching the price point, and I am watching the price point of 1388. That's a key level that gold needs to get above out there, or the GDX, I should say, needs to get above in order for it to at least try to head for the hills, those hills that formed on December 4th out there. So that's what's going on in the mining sector. A question if I would take a look at the LQD. So we will do that. LQD is the iShares investment grade at iBox. What be here? What is this? Is this a bond fund? But let's just take a look at iBox. I'm sorry, LQD out here, trading at 114.59. What is it doing? Excellent question. Right now, it's just simply trying to get over its weekly market profile, the old support, which has been resistance. And that level is 114.77. So I don't know if you are long or short, but right now what it's doing, it's trading within a range, basically, which is between 114 and a quarter and the 114.77 level. If you're long on this, expect it to run into some real resistance at 115.61. Ticker symbol there is LQD. So we've covered gold. We've covered the general markets and what we should anticipate, levels of resistance out there. We know what the probabilities are. So we know what the setup is. And the setup is the market is going to close higher on Thursday than where it closed on Friday. And it could be just 1%. We don't know what the extent is, but odds favor, as I say, 67%. And then the odds favor that the following Thursday, the market is going to close higher than this Thursday, and those odds are like 75%. Those are really good odds that during that week, that end of the year week, that the market simply moves higher. Does it have to do that? No. But the probability is in your favor out here, or the probability is in the favor that that is what's going to occur. Let's take a look at, now, how will we know if that's really going to come into fruition? One way that we'll know is by paying attention to the VIX index. And if we take a look at the VIX index, the key level to be watching, in my opinion, first level is going to be 1905. And it is trading right now at 1924. If the VIX index closes below 1905 today, then what that says is the VIX index is more likely than not going to go make a run for 19. Says it's the, no, that's the futures contract. It's going to go make a run for 1804. 1804. So the key numbers to be watching, 1905. If you see the VIX index close below 1905 today, that tells you and me that the VIX index is going to go make a run for 1804. If the VIX index is moving lower, what two things will the market do? Either move sideways or higher. That just has to. And it doesn't have to, but that's what happens out there. So that's key. So we've given you some number. I've given you some numbers out here to pay attention to, right? 2011.25 in the ES Mini. You see the market get above that. You see the VIX get below 1905. It couldn't be any easier than the market communicating to you that it wants to move higher. If those areas act as resistance, then the market has not convinced us that that's what it wants to do out there. Those are the benchmarks that I would be watching, or that I am watching, to give us a clue as to where the market wants to go. Let's take a look at some of these individual stocks out here. Let's take a look at Agios Pharmaceuticals, AGIO, and let's take a look at it. It's trading out at 62.52. It is trying to to get back inside. It looks like it's weekly market profiles. So it's right into a resistance area. That price point being 62.70 or 62.66 right now. If it can get above that area, looks like what it will do is try to make a run all the way up for the resistance level of 83.13. That ticker symbol is AGIO. And looks it's really coming into resistance here. That had volume of 1.6 million. You've done about 618,000 shares today. But looks like it's going to go ahead and repair that window. So I would say odds favor the next move to 70.87 and then on its way up to about the 83.13 level, AGO being the ticker symbol. Let's go take a look at Priceline. What is Priceline doing? PCLN. That's moving a little bit lower today, about 0.5% to the downside, off $6 out here. What is Priceline doing? See if we can get a gauge on it. So Priceline on, it's kind of hard to gauge Friday's volume with it being option with the quad witching out there. But if we take a look at what did occur on Friday was you had Priceline moving lower with 882,000 shares out here. And what does that mean to us? What does that mean to us? Really not a whole lot because it wasn't going against any kind of swing point or anything. But Priceline is more likely than not, as we take a look at this, it is more likely than not, if it closes below today, 1282.65, I'd have to say more likely than not, it'll go test that swing point out here. Looks like a little hammer style candle from November 24th, which has volume of 1.4 million shares out there. So if it can get down and test that level, probably the top of that, which is 1246.57, ought to do it on light volume. And if it can reject that area, then you're just looking at price moving between 1243 and 1301, maybe even as high as 1339, and that's what's going on inside of Priceline. If we look at Pioneer Natural Resources, that just jumped up to the front here as a leader, dollar-wise to the downside, off $6.37, 5% out here. Pioneer Natural Resources, let's go ahead and get rid of that A to B equals CD pattern out here. This thing is moving lower. And moving lower, looks like with some conviction, 2.5 million shares. Looks like it's headed back to its swing point from August 26. Geez, that had 3.4 million shares. So this thing on a light volume day is moving lower with volume. Pioneer Natural Resources very likely going to go test the 105.83 to 110.32 level. If we go take a look at Concho Resources, CXO, off of 4.5% down about where'd that go? Down about $4. See what kind of volume is in CXO's its ticker symbol. So what is this thing doing? This thing is already below its most recent swing point. That was from the trading day of August 25th out here. That had volume of 1.9 million. You're down with 2.8 million shares out here. So this thing is looking ugly. It's on its way back into. So it had a sign of strength right back here off of the bottom. Was that a sign of strength? Hold on. Let me just widen this just a tad. Now I was really looking at a different candle out here. It looks to me like Concho is headed to CXO headed to about 77.25 or so. You're at 87.78 right now, so about another $10 to the downside, perhaps at a minimum. To the upside out here, you've got Google. That is trading up a little under 1%, up $5. Consolidation up at the top here. Not a whole lot for us to hang our hat on in Google. There's nothing here. To me, that looks bearish as I take a look at it. Ideally, Google would get down to its most recent breakout area and do it with light volume, but that is a huge range because you're talking about anywhere between 657 to 701 as the level where Google had broken out. Alphabet soup out there. Let's take a look at, I want to look at here, ExxonMobil. I saw a comment in the den about ExxonMobil. So let's go take a look at it and see what it's doing. Trading down 31 cents. 76.97 is the number out here. Now, ExxonMobil, you and I have taken, I don't know if it's on this chart or not, but let's do it anyways. ExxonMobil had pulled right back into support out here. Whoops. This is the monthly chart. When I say support, maybe it was on a quarterly basis that we did this, but let's take a look at it just the same. If we take a look at a trend line out here and we come off of these lows, No, that's not the one. That's actually a longer term trend line. That takes us back to 1995. So it must have been, was it this trend line? Yeah, it was this trend line right there. So we're taking a look at the trend line coming off of the 2003 level. Now, the nice thing about the two trend lines out there is when you break one trend, you typically will go to the next trend out here. But we can see that ExxonMobil, has come down to a long-term trend line, and it is held. It's one of the better looking stocks versus comparing it to like CVX and a couple other Chevron and a couple other ones out here. So the monthly looks pretty good. If we now switch over into the daily time frame, what we're going to see here, let me just remove the A to B equals CD pattern out here. What we know about ExxonMobil is it had a decent sign of strength out here, and that was on the trading day of December 15th. This was a wide-ranging bar, just fill in the gap there with price. Wide-ranging bar to the upside with accelerating volume is what we'll call it, 7.7 million shares. Today, it's backing down into that breakout area, kind of like when we just looked at Google. Remember, I gave you a range here for where price is likely to head to. We can go ahead and lift this up here. We'll go ahead and widen it, make it a little bit easier. So we know about gaps here versus just wide-ranging bars. That gaps give you a couple different areas to take a look at for where price can pull back to. Remember, a gap is a wide-ranging bar. You just have to fill in the dots out there. You've got to go ahead and color it in. And that says that you want to be buying breakouts. You've got an excited gap. There's a couple different levels. Likewise, gap downs, you want to sell breakdowns out here. Want to go ahead and use some volume, some other metrics. If we take a look at what ExxonMobil is doing, though, today, and as we talked about, light volume, it becomes pretty hard to really use volume as a real major metric for what the market's doing today. 7.7 million shares going against that little breakout that had 24 million shares. So we can see that it's coming down on light volume. We don't know how to gauge that. Let's do this. If ExxonMobil closes inside below 77.33, pretty good chance it's going to get down to 76.22. That could be your buy area if you're looking to buy ExxonMobil. And if you're looking at it from a long-term standpoint, that is where I would go ahead and take a position or begin taking a position. And then what you know is if you were in it, because it's a long-term trade that you would be looking at, then you would know that if ExxonMobil breaks out that trend line to the downside, we were wrong on that trade assumption out here, that it was not the right place. And then you would go down to that next trend line that you and I took a look at. But you've got to determine where it is that your back is up against the wall. And I would have to say inside ExxonMobil, our back is pretty much there. Again, if you see it close below that trend line, or at least below the August lows out here, then what we're taking a look at is move down probably in about $56 area out there. Do we have a caller on the line? I can't tell from that message if we do. So if we do, let me know, Steve-O, and we'll go to our caller out there. But I can't tell from the message. Let's take a look at... I'm waiting here for that message. Let's take a look. Oh, we do have a caller. Mike from Thailand.
You can hear me.
Loud and clear.
Yeah, good deal. I'm a little disappointed here. I'm wondering, the NYA hit a 5-day low. The S&P 500 tested Friday's lows and rejected it. But I'm wondering, with the NYA doing what it did, what are your comments on this most comprehensive index hitting a new low? Let me see, 1, 2, 3, 4, 5. Yeah, 5-day low, and then now we're coming up. This whole market, it just seems like it's rallying. What's wrong with what I'm thinking?
Well, I don't know if there's anything wrong with what you're thinking, but what we're going to have to do is we're going to have to go away here for a quick break, and when we come back, let's you and I take a look at the New York Stock Exchange, all right?
Thanks.
All right, that is Mike in Thailand, and I believe we're going to look at the New York Stock Exchange and the S&P 500. Steve Rhodes with TFNN. We'll be right back.
Thanks a lot, Steve.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's up 79, S&P is up 11. We're on the line with Mike in Thailand. So, Mike, we have about a little over 4 minutes to do this segment. So,
That's all right.
let me try to show you what's going on, or at least the patterns inside the market for both the NYSE and the S&P 500. The first thing that I want you to notice on the S&P 500, because it's very clear on the daily chart, is the candle that formed on December 14th. That candle.
I'm just trying to see the December. All right. Yeah, I'm there. Okay. Yeah, go ahead.
Yeah, so December 14th, it might make it easier to just follow along on Tiger TV, and then you can go back and you can take a look at it. But on December 14th, you had a nice little hammer candle. Now, a hammer candle, the message that gets communicated to you and I is that the market is trying to hammer out a bottom. Until that level fails, your assumption must be that that is a level of support. That level has not even been tested. Inside the S&P 500, that's 1993. Inside the New York Stock Exchange, the three-candle session that formed on the trading day of December 11th, the 14th, and the 15th is what's known as a three-river Morningstar. That, too, is a bullish reversal signal. Now, it's the New York Stock Exchange, which you really ask the question, hey, what is it doing? What the New York Stock Exchange did when it created that three-river Morningstar was it created a Gartley buy pattern. If we take a look at that, a Gartley buy pattern requires a couple of things. One, you need to have an A to B equals CD. In the case of the NYSE, it made a 1 to 1.272, A to B equals CD to the downside. That price projection was 98.87. The actual low was 98.80 inside the New York Stock Exchange. So you get your A to B equals CD. We then get that bearish reversal signal on December 15th. What does the market do? The market moves higher. Now, the second element, this is in a true Gartley, doesn't have to be any kind of retracement level. If you read his book, it's just looking for a reversal in the opposite direction of a potential strong trend out there. And there was certainly a strong trend coming off the September 29th low. We cannot argue that. However, Larry Pesavento was good enough to say, hey, you know what? I can go ahead and make what Gartley did. I can take his work and make it better. And so Larry did improve upon it. And when he improved upon it, he said it would be ideal if those A to B equals CD patterns hit right around some retracement levels, some Fibonacci numbers. Well, inside the New York Stock Exchange, it did that. The 0.618 retracement level was 99.75. What the New York Stock Exchange has done is given a nice big old bullish Gartley pattern. Until that gets taken out, that says that prices can go to the upside. Until the lows, which have not been tested, of December 14th inside the New York Stock Exchange. And oftentimes, Gartley patterns will move higher than come back, and that's what it's doing in this case here. So what does that really say for us? Unless the lows get taken out, we know where the bulls are hanging out because they've given us, you and I, signals on the New York Stock Exchange as well as the S&P 500. We know that price can easily run to.
Steve, can you repeat that last sentence? Sorry about that.
Oh boy, I wish I was actually.
Just the last 4.5 words.
I know, but I don't know. I don't know what I. Here's I'll just again.
Okay.
Yeah. Here's what we know. Until the market can bust out the lows, the markets are going to move higher. You've got bullish reversal patterns inside the New York Stock Exchange and a message inside the S&P 500. We have a 67% chance of that the market's going to finish higher this week than it did on Thursday, and a 75% chance that it's going to finish higher next week than it does at the end of Thursday's session out there. And I would love to go more into it with you, but the show's over.
Yeah, I understand.
I hope. Hey, Merry Christmas! Thanks for calling. That goes for everybody out there. And stay tuned, folks. And I'll see you come tomorrow at 1 o'clock. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.